People, we're going to have fun today. We're going to have fun, and I hope I don't lose it. Okay, this is my post-market wrap-up for this lovely day, Friday, January 12th, 2018. All right, let's start off with this, my lovely, lovely friends. New record highs across the board for the stock market. The Dow Jones Industrial Average put on 228 points. That's all well and good, and I know for a fact that you are not surprised about this at all. If you've been following my work, I've been telling people this is what's going to happen, and it's not going to stop. How many times have I said it's not going to stop? Well, it isn't going to stop. Let's talk about a few things that occurred today that drove this market to where it is and where it's going to go. The dollar. The dollar got melted down. Truly, it was epic today. And that's another trend that is going to continue. As a matter of fact, this morning, we found out that inflation is starting to tick higher. All right. I want you to keep that in mind as we move forward through this video. So some entity here, I want you to think about this, is buying bonds. Did you watch the bond market today? Go to my website, traderschoice.net. I can't stress this enough. As a matter of fact, did you know that you can watch my videos right on my website? So you can avoid going to YouTube. Just save traderschoice.net to your computer or wherever you watch these things, and you can watch my videos right there. Why is that important? Because as I'm talking about what's going on, you can look at the bond market chart and everything else is right there, so you can really stay ahead of these markets. So anyway, when you get a minute, go look at the chart of the bond market. You will see some entity out here really wants to buy that debt up. Really, they have to have it. Despite the fact that this market is in some type of multiple expansion cycle, it's historic. But some entity out here who, I don't know, maybe we can come to a consensus in a minute. We're going to talk about that. Believes that they should lock up their cash for decades. And avoid the stock market that's in melt-up mode. And again, some type of multiple expansion as the dollar melts down. All right? As a matter of fact, what we're going to do right here in this little segment, I made a little thinking cap for myself. I would suggest you doing the same. Get a little piece of paper and make a little thinking cap for yourself. Let's see if I can get this on correctly. Okay. Thinking cap. There we go. Now, this is making it all clear to me right now. So what do we know? We know that the Federal Reserve, I'm sorry. We know that the Federal Reserve is not hitting their inflation target of 2%. Meanwhile, we know they are determined to do so. Okay, we found out today inflation is starting to tick up. Very nice. So, thinking cap, okay. So the Fed wants to hit a 2% inflation target and is determined to do it. Meanwhile, there is some entity out here who, I don't know, my thinking cap's not telling me who just yet. There is some entity out here that wants to buy a 10-year debt note that right now, as I am doing this, yields 2.55%. So let's see. Whoever out here wants to buy a 10-year debt note, what are they willing to accept as a return? Because we know the numbers are not real. I mean, at least that's what my thinking cap is telling me. So this entity out here is willing to lock up their cash for 10 years. How about this? Better than that. The U.S. 30-year debt note is paying 2.85% yield. 2.85%. So the difference or the spread between the 10 and the 30 happens to be 30 basis points. So let's just use the 10-year for fun. Some entity out here is willing to lock up their cash for an entire decade with a yield of 2.55%. Meanwhile, the Federal Reserve wants to hit an inflation target of 2%, but we all understand the actual rate of inflation is much greater than that. So they're willing to accept negative returns. They're willing to lose cash in this environment of multiple expansion stock market that has nowhere to go but higher. So who is doing it? My thinking cap just doesn't work, but who do you think? Who do you think is buying this? Wow. Look, it goes back to what I've been explaining for like ever now. Nobody would, no investor, nobody with even one functioning fraction of a functioning brain cell would want to own debt here. Meanwhile, some entity is propping up the bond market so stocks can move higher and the dollar is melting down. This is no joke. I mean, the dollar got slammed today. The dollar has been getting slammed. It's going to continue to get slammed. So if you want to stay in the dollar, if you are such a dollar bull here, good for you. I will eat your lunch for you every day, your dinner and your breakfast too. Because, you know, seriously, you got to be a mental midget of epic proportions to be holding the dollar. Or to be, seriously, think about it. It's unbelievable. It's unbelievable. But there are so many people that are just going to stay in there and smile like this. Oh yeah, I'm hoarding dollars. I'm going to go to work tomorrow. I'm going to earn some more dollars too. Oh yeah, and I'm going to get poorer every single day. Understand, people. This is what's happening. And it's not going to stop. The dollar is going to continue its downward fall. Why do you think? I mean, let's just talk about metals today. You know how I hate talking about that? Despite the fact that the market melted up today, stocks, gold and silver derivatives put on 1.5% each. I think gold put on 1.62%, silver put on like 1.5%. Why? Because the dollar is bleeding to death. You understand? It's that simple. You don't need a freaking thinking cap to understand what's going on here. And you don't need even a fraction of a functioning brain cell to know who's buying up the debt here. You know, let me just say this. This is the first time I'm ever going to say something negative about this person. Rick Santelli. Rick, CNBC. Okay. I think you drank a little too much of the Kool-Aid lately, Rick. I know you cover the bond market. You talk about the auctions. You're giving them the A's and the B's and the C's. And you used to kind of lay it out for everyone, Rick Santelli, what was actually going on. But you don't do that anymore. Why? Someone's telling you to shut up? I'm sure that's what they are doing. It's very sad, Rick. You should get out of that gig, find a new one. Don't sell out, buddy. It's very sad. I mean, the ultimate sellout is Steve Leisman. The guy, wow, there's something wrong with this dude here. But look, in all seriousness, people, thinking caps aside and all this nonsense here, the fact of the matter is this. The stock market is in an absolute euphoric mode here. How long is it going to go on? I have no idea. We have not had any kind of a pullback. What we get, and I covered this I think yesterday in my market wrap up. We get like 0.5% pullbacks, and then the market vaults higher. We don't get a 1% pullback, not even a 1% pullback anymore. Again, I really believe that we're in a multiple expansion cycle that is probably going to get worse as long as they keep the dollar suppressed, and they're going to continue to do that as long as we're seeing inflation. But again, some entity, despite what I covered, is willing to buy this debt and actually lose money. That's what's going on here. Any entity out here that is buying a debt unit or holding a debt unit like a dollar is losing purchasing power, losing cash in this environment. Nobody should be doing that here. Why do you believe we're seeing things like cryptocurrencies take off here, despite the fact that, let's say, Bitcoin has pulled back substantially since it started trading on the CME exchange, and what they've done to it is disgusting in my view. But this is Wall Street. The wizards play their game. It's a shame. I think there should have been an uproar by those out here that like to hold Bitcoin when they found out, because they don't understand. You see, those of you out here that believe that you know everything there is to know about Wall Street, and you thought that holding Bitcoin was going to keep you safe from Wall Street, you walked right into the trap. It's a damn shame. And I expressed my displeasure with what they did, clearly. But again, it's just it's a game that's going to be played for as far as the eye can see. The wizards, they always win, except here, where we know what to do. You need to get out of the dollar. If that means getting into a cryptocurrency, if you don't want to hold gold or silver for some ungodly reason, well, that's okay. But again, bet against the debt. Become your own central bank. Things that you do not need a thinking cap for. You should be doing this for a long time. They are determined to suppress these prices, but at one point, it is going to be the market that determines fair value. When? Don't know. Don't care. I know what I should be doing. You know what you should be doing here as well. All right, look, so it's Friday, and we got a 3-day weekend. I have a 3-day weekend. I am thrilled about this. Unless something freaking mental happens here, you won't see this guy until Tuesday, and we're gonna watch this whole thing. Before I let you go, earlier today I spoke about the junk bonds and how they were not getting bought up today despite the market rising. That is a concern to me. I'm not saying we're going to get a meltdown or even a pullback of even 0.5%, but that little bit of a divergence there, despite the fact that they were buying up bonds today, which is the most asinine thing you could ever do in this environment. Seriously, I don't know another way to put this. Anybody that is buying a debt unit here is an ass. Am I allowed to say that? Well, even if I'm not, that's frankly what you are. And you're being laughed at by me and probably a lot of other people too, but we know who it is. We know who's buying up the bond market. This is the Federal Reserve, who will not allow in any way, shape, or form the bond market itself to determine fair value. So when you got guys like Rick Santelli out there talking about the auctions and how they're going really well, Rick, stop drinking the Kool-Aid, dude. If it means you should leave CNBC because someone there is not allowing you to say what's on your mind like you used to, you got to get out of there, buddy. Get out of there unless you need the job that bad. I don't think you do, quite honestly, and it's very sad to see what's going on. Don't follow Steve Leisman down the rat hole. That's all I have to say. With that said, I love all of you guys and girls out here. If I've covered things that you find interesting or important, please share my video. Please get it out there. Give me a thumbs up. It makes me really, really happy to see all those kinds of things. And remember, you can avoid YouTube altogether. You can watch this on my website, traderschoice.net. You can watch the bond market, gold, silver, Bitcoin, Ripple, Litecoin. I got everything there set up for you, and I hope you're utilizing that resource. With that said, have a great weekend. Have a fun weekend. And we'll see you Tuesday. Over and out.